Good morning. Welcome to Market Wake Up. My name's Jordan. This is John, and you're in the one-stop shop to get up to date with everything you need to know to start your trading week. We're going to break down the macro mumbo jumbo so you don't have to talk trading and talk 2025. This is the first week we're doing a stream where we're in 2025, John. I'm looking forward to this year. I mentioned last week I'm ready to get back into the prospect. I haven't, but I'm ready. I'm still ready, and I'm looking forward to picking your brain a little bit today on opportunities near and far. So without further ado, guys, welcome to Market Wake Up. Let's get into some actionable trade ideas. Good morning, John. Good morning. Happy Monday. Happy Monday, everyone at home as well. It's a Monday afternoon. It's a nice one. It's been 38 degrees today. So it's a warm one. It's a warm. Nah, that's hot. We've also been bombarded by flies. My back patio, I saw earlier, just thousands of flies, which is always fun. Always fun. But other than that, John,
today in Australia, it should be that should be a banner that runs across our screen.
Yeah. Disclaimer. But no, I'm doing good. It's good to be back. It's the first full week back, and I'm looking forward to it. Right, and the market's surprisingly steady. Mm-hmm. Okay, the quick gander. Other than a couple of commodity markets, I mean, currency markets reasonably predictable over the past week, and this is me just scanning it as we speak. But I also know it's NFP week, so if just in case Stillwater needs a ripple, we've got something on Friday. But other than that, John, how are you doing? Happy New Year to you as well.
Yeah, Happy New Year, mate. I almost forgot that this is the first stream since the New Year, isn't it? Because I think our last stream was just before New Year. So Happy New Year, everybody. I'm excited for this year. This is going to be a very interesting year for us. I think there's going to be lots of stories to talk about, which I'm really excited about because we've got President Trump obviously coming into power this month. So this is going to be a busy year for us, I think, because there's going to be lots of stories here, there, and everywhere. We could be chatting a lot about tariffs and who's he tariffing, how is it going to impact to the market. So I'm quite excited about
you get a tariff. You get a tariff. You get a tariff.
Yeah, exactly. And do you know what? I've already deleted Twitter. I had Twitter for 2 days. I subscribed back, hit the notification bell on Donald Trump. 4 tweets came out, and then I was like, "Nah, I'm done with this. I'll just wait. I'll click some FX alert elsewhere that will give me that because I just couldn't handle that verse, and especially now Musk is starting to attack the UK. I don't know if you've seen this.
He's attacking everything.
Yeah, trying to get his political arm in, I think, at the moment. So I thought, you know what, screw that guy. My neighbour's got a Tesla. I might light it on fire.
I tell you what, if there's an arson attack,
no, don't play that back there. I'll take it back. It's on the internet. It's on there forever now.
Yeah, but no, I think in terms of, let's get straight into politics because why not? It's Monday morning. What more do you want? I think in terms of Elon and Trump getting in office, they're doing the right thing for America. They want everything to go through America. Now, at the moment, especially what we've seen through the Democratic Party is America being this kind of support network to help other nations and to do a lot of business, and you help us there and we'll help you there and we'll help you there, we'll help you. Whereas I think in Trump and Elon's eyes, America is the service, not the service provider, but we are the service. So all of these little things that we're doing to support these other nations, they should be paying for. And I think that's going to be the switch is they're going to monetize the US like it needs monetizing, but essentially bring it back to the powerhouse and be like, hey, we don't need you need us. And I think that's going to be the shift. And that's why I think emerging markets might struggle through 2025.
No, yeah, absolutely. And this is going to be the big game for us, really, isn't it? It's going to be who can tariff back as well. How are they going to tariff back?
What leverage you got?
Yeah, what leverage has anybody got to try and get back at anybody in this market? So it's going to be a super interesting year. This is going to be a very interesting year for sort of stock markets. I'm quite interested to see if we're going to see the exponential growth that we've seen over the past couple of years, because I don't think we are going to see that, and I think this could be a struggle year.
I remember saying this in 2024 saying I think it was a tough move forward. It was. I nailed it. Economically, 2024 was an absolute disaster. It was just everything was happening. There was two wars going on. There was natural disasters. You name it, it happened. Stocks still rallied to all-time highs. I
mean, it's quite interesting when you look at a stock chart, isn't it? It always kind of goes up. It just has these kind of like bumps in the road on the way. So I think it's how do you navigate the bumps in the road?
I mean, there's up and there's up.
Yeah.
I mean, you look at a stock chart, yeah, it goes up, and then there's up. And I think last year was a fun year. Don't get me wrong, as a trader, wow, we had a lot to talk about. But yeah, I'm moving into 2025. I think there's calmer seas.
I would hope so. I would hope so. Whether that's going to be the case, though, I don't know, because there's still a lot of unrest going around at the moment. Obviously, there was reports this morning that there's actually political unrest in Austria now. So the Eurozone is still under a lot of pressure right now in terms of politically, elsewhere as well. I made some notes this morning that Canada are going to go through a bit of a political turnaround as well. Trudeau apparently is going to resign this week. And really interesting where you see dollar CAD prices at the moment. We're up at the 145s now. Yeah. That was something that I did not expect to see. But at the moment, we are seeing that kind of move in dollar CAD right now. CAD futures really low right now. And it's sparking a lot of interest for me as a sort of long-term. So when I see markets go one directional at some point, I start to think about, hang on, how far can this last, or how long can this last? Now, obviously, the saying is the market can stay, irrelevant longer than you can stay solvent or whatever it is, or rational, sorry. But at the end of the day, it's kind of there will be an inflection point in that move. We are starting to see oil prices starting to move higher now, which could obviously impact a little bit in the side of CAD. If we do see that political switch as well, it could actually help Canada in terms of its interest with Trump, because I know Trump and Trudeau are not really on the same wavelength. I think actually Trudeau kind of aligns himself a little bit more with this, Europe and Mexico and things like that, which would not be in favor of Trump. So I think if he obviously resigns and there's a new political power in Canada, they may have a more sort of Canada first approach, might work alongside the US instead. And that could be positive, CAD. We'll have to wait and see. But it was a bad year for commodity currencies, really, wasn't it, at the end of the year? So I feel like maybe we need to see, or we don't need to see, but there could be a slight resurgence in 2025, depending on how things really do play out. I think China's story is still an interesting one, and that's going to impact us for a few months further.
Yeah, the China story is not written, and the impact of the China story is long, because it's still not necessarily getting better. And these levels obviously aren't enough levels to support the other nations which are feeding off of it. I was about to say 2025 could be the year to make or break BRICS. But with China in the state that it is, I'm not sure. I'm not sure.
What makes you think that?
I feel for BRICS, because BRICS want to come through and essentially devalue the US dollar. Right? They want to move away, and they want all the other world trade to be done in maybe a centralized currency that's away from the US dollar. In order to do that, you need thriving economies. You need people to be willing to invest in that and to see the upward potential. If you have Trump and Elon come through and go very pro America and in that trade and become that powerhouse, it really hurts emerging markets. And then if you battle that as well as China massively underperforming at the moment and people looking to do business elsewhere because China just can't uphold the demand, like that kind of BRICS proposition there, it's going to be hard to move away from a performing US dollar in that case.
No, yeah, I agree. But it's also like the only real way that the US will ever give up any kind of form of power is by war, really, isn't it? and losing
Yeah.
a war, which, although there's a lot of wars going on and there's a lot of crap going around in the world right now, I don't see that happening just yet. It probably
I
will.
hope not.
I hope not.
I
No, I know it probably will happen at some point in our future, but I'm hoping it's not in my lifetime. But we'll have to wait.
I think I'll be surprised if we don't see one in our lifetime, a big one. But I hope not.
No, I hope not.
Yeah,
And that's
yeah,
depressing to chat about. So
it is. Yeah, and now I feel really good about it
yeah,
being Monday morning. But yeah, US dollar CAD chart. I pulled it up there. I'll just give everyone a quick look on the screen there, just so you can see. This is the daily chart. You can see the sheer movement that it's put in recently. There's up and then there's up, right?
yeah,
And this is quite. But I like what you said there. Commodity currencies really have been last 3-4 months of 2024 really heavily shorted.
yeah,
Could be good buying opportunities. They could be good buying opportunities moving into 2025 if we see improvements. The risk sentiment right now looking at commodities isn't pretty. But you pointed out, and we'll talk a little bit more on it shortly, oil making a technical move towards the upside, which is interesting. We've done it before and just gotten nowhere, so don't hold it with too much regard. But last week, it's evidently real pushed up at 70, 75, is that? Yeah, 73, up at $73 a barrel, which is very interesting.
Yeah, no, it is, because I've been trying to actually look around to see what has really driven this kind of oil move. Now, there is a lot of talk that sort of optimism in China has helped kind of boost that. And that story kind of makes sense, because if we do see obviously China kind of open up again and flows through China, then we probably see more demand for oil because of the natural trade that goes on through sort of imports, exports, X, Y, and Z, and just kind of deliveries of goods and whatnot. So I imagine that if China, yes, did open up and China was doing really well, you would see that, you know, demand for oil in general would go up, which could then obviously create higher prices in oil. Do I see that right now, though? I don't know. It's one of those weird situations. I don't know the story behind this breakout right now. All I can say is that it has broken out. Is this a moment of us to kind of think about, okay, it's broken out, but ultimately, why is it broken out? And I think this is, again, something to look at. I looked at this breakout, and as a technical mind, I went, oh, I could buy this. You know, I looked at it and I was like, this looks good. I might buy the pullbacks on this. But then I looked and said, well then I'll, you know, go through my process. And my first question I asked myself is, well, why do I want to go long this? And I can't answer that question just yet. So I don't feel like, if I can't answer the why I'm going to be in something, then I shouldn't really be in it right now. So I will do some further digging, see if there's anything around. Maybe we can report next week on what's going on in the oil market and have a little bit more of a deeper dive analysis on it. But right now, I can't really find anything that was the big sort of spark for that market move. You know, I looked at sort of OPEC and things like that. There was nothing really in terms of sort of supply and demand fronts there. There wasn't anything that kind of jumped out at me. So, you know, unless I've missed something, then I'm going to have to go back and have a little look. But, you know, this is a nice technical break for traders. I'd just be cautious on being long on that approach. You know, if you do see a good reason why the oil prices have been breaking higher, then obviously by all means, do whatever you want to do with your own capital. But I'd just be a little bit cautious on this break. But that being said, you know, could be good flows into CAD in this sense.
Well, that's what I just found interesting, because this oil move isn't something that's happened today. It's happened over the past 6 days.
Yeah.
Whereas if you contrast that kind of with the US dollar CAD, it just flatlined. It didn't get enough traction, the Canadian dollar there to move, which I did find a little bit interesting. But regardless, let's get into freshly squeezed. Any guesses on where we're at with the VIX today?
Absolutely no idea.
Oh, give me a swing.
What was it at last week? Was it 14s or something? Or was it 12s? I want to say it was like...
I want to say 24, but I'm...
Was that 24? Oh, I thought it was lower. I'll go 15 just to kind of give a roundish number.
16. Yeah, You're right. No, it was. It was down at 15, 13 last week. Yeah, that's right. That's right. I remember, because we got up to the 27s and then straight back in. So fear index still reasonably low. As I said, kind of calm market conditions from what I could see over the past week. And I don't know if it's just the new year, but I feel that. I feel a little bit in control coming into January. Now, I'm not in touch with the market right now. No way, shape, or form am I in touch. But I feel an essence of, I think it's just the trader mindset is, hey, I've got 12 months to mess this up. I can mess up the first 2 months. I've got another, 10 to get this back. I can be a little bit more rejuvenated. And I think the markets will show that. I think moving into the new year, you'll see a lot of people be a bit fresher. They've just spent a lot of time with their friends and family through the holiday period, brought in the new year. Did you bring in the new year?
Well, I had a very interesting new year. I was driving home. So I watched all the fireworks going off while I was driving on the motorway, but I didn't get home till like 20 to 1. So, yeah.
Oh, that's sad.
That was my new year. I was helping my partner's sister move house down in Dorset. So I was actually, lifting fridge freezers and moving beds and things like that on my New Year's Eve. So,
you did better than I did. I was in bed by 10:30. So,
it's too late.
We're macro traders. We're macro. No. I spent New Year's Day at a beach day, which was absolutely beautiful. We went snorkeling, and then I spent the afternoon at the horse races.
Nice. You did say you do some betting there. Do some trading.
I did. I did. I broke even after 9 races, and I reckon that's a pretty good going. For a day of entertainment there, and out of it's breaking even after nine races. That's not too bad. I'll cop that.
No, I like that. Talking about this would be the name of my horse. I think I'd call it, if I owned a horse, I'd call it the Vix. I feel like that's a good name for it. I feel like that's a good name.
Take my money. Take my money.
Yeah. I love it. Because you don't know what you're going to get. That's what I like about it. Now, seasonally, actually in January, we do actually see a little bit of a rise in the volatility index. So I'm kind of leaning towards that at the moment. I'm honestly a bit of a spike.
We need to get. Hang on.
Is there a horse out there called the Vix? Because if there is, I'm investing.
You now need to get. Oh, why is that so small? Every time you do a. Can I make that bigger? I can't. Every time you do a bet, there's no way we're not putting a little horse on the chart to reference what we're doing. Here's the VIX. The VIX. Oh, the boss is going to love this. My ideas have just flown. Regardless, let's get into this week so everyone at home knows what's happening on the calendar. Big one is the end of the week, right? It's Forex Factory. Forex Factory is the character. Sorry, it's NFP. As you can see, my mind just looked straight at Forex Factory to get my that calendar ready. But NFP, the end of the week, that's obviously joined with the unemployment rate of Canada, but that's always happens, and I don't think anyone actually cares. I think releasing that at the same time as NFP in the US might possibly be the smartest decision the Bank of Canada's ever done.
Yeah, I love that. I love that as well.
Like no one looks at
it, and it's quite shocking, really, because it's quite important. It's very important.
It's very important. But they've just managed to put it out at the exact same time the US, the biggest economy in the world, does. Yeah,
slip it under the radar. I like it. But yeah, no, it's first NFP of the year, so this is going to be an exciting one. I think a lot of traders will be eyeing this one up. Like you said, they come back with these fresh mindsets and they think, I'm going to nail this year. First week we have back is an NFP week. I'm going to try and nail that move. It's going to be an interesting one, isn't it? Because I think, I've actually prepared a video for us going out next week about sort of Larry Williams's predictions going forward. So keep an eye out for that one next week in 2025. He puts a big push on employment. He really wants to see employment figures sort of improving. The unemployment rate is still fairly high. You know, we're at 4.2%. I say high. 5% for me is the big no-no. I think if we get above 5%, that is the big no-no, right? And it's kind of held above there. We got to 4.3% last year, which was the highest level we've seen in a while. It then came off of those highs and is kind of settling at 4.2% right now. But the unemployment rate is something I'm really going to focus on this year. I think labour market data is going to be very, very important going forward, especially because we're going to have, I feel, inflationary pressures, especially if we see Trump try and nail all these tariffs down. If we do see this kind of Trump tariff trade war going on with multiple countries, then that could hurt the US consumer. And I think that's where the problems are going to lie. You've already seen already that the Fed are trying to kind of position themselves in a way where they can kind of balance what's going to happen with Trump at the moment. I think I haven't looked at the CME Fed Watch tool this week at all, but I imagine by the end of this week, if we were to see sort of an increase in sort of job numbers at any point or whatever, it would be, okay, we're definitely going to hold the fort here and we're not going to cut going into the meeting this month. So yeah, it's going to be a very interesting point to watch employment figures. I'm going to be watching that very closely. I think if we start tipping the scales up to sort of 4.5%, 4.6%, I'm going to be like, whoa, this could be pretty tasty. So when that will be, I don't know. I think it will come at some point, but it might be more towards the end of this year where we start to see things like that, because you're going to have that sort of period of a lull where the tariffs are going to happen, but you're not really going to see the impacts of that for X amount of months or whatever.
Yeah, so it's like interest rates, so 8 months until the economy actually feels it.
Yeah, exactly. But like when you look at the positioning of the sort of, you know, the bond market and you look at yields right now, especially on the long end, you're looking at that and you're saying to yourself, well, they're actually thinking that rates are going to be a lot higher at the moment than where the Fed have cut. So they're obviously leaning a little bit more towards higher interest rates. And that to me means that we're probably going to see a little bit more inflation impacts going forward. So I am kind of looking at how that will play into this year. Will it play into dollar positive? Maybe, you know, will we start to see the dollar continue to push higher because of those higher yields? That's what tends to happen. When you have higher yields, you have a stronger US dollar. So I'm going to be watching that kind of narrative going forward. How non-farm payroll impacts that this week, I don't know. I haven't looked at the seasonality of a January report, but for me, this is going to be very important going forward. 154 is expected. Forecasts previous was 227, so it is forecasted to come in a little bit lower. Average hourly earnings expected to come in a little bit lower as well. So yeah, it's just going to be an interesting year for the US. But NFP predictions, I don't think I can do.
We're not very good at predicting employment data. We don't have a great track record. It is forecasted to come in a little bit low. But looking at really, because you mentioned there the bond yields forecasting, obviously next year's interest rates. Did you get a chance to see the Fed's dot plot?
I have not, no, but I don't really tend to see a lot of value in that. But yeah, go ahead.
No. Here you go. Here's the Fed's dot plot. So for everyone at home, if you haven't worked with the Fed's dot plot, now, like John's just alluded there, a lot of people go, I'm not too sure about it, right? But essentially, each dot in this represents one of the members of the FOMC. And this is their forecast on where they think the interest rate median will be throughout each year. So you can see here was 2024, here's 2025. You can't see my mouse. Here's 2024, here's 2025, 2026, 2027. And usually standard, as you carry on, it spreads and spreads and spreads. What's interesting to me that I found is 2025, they're only forecasting 2 25 basis point cuts. And that's because the majority here is sitting in between the 3.75 to 4, which is 50 basis points further down from where we are. So you're right. What the yields are pricing is very similar to what the Fed's putting out there, that hey, we might have cuts. We might not have cuts. If we do have cuts, it's only going to be 50 basis points. I'm not looking to go any further than that. We've spoken on this. If tariffs are if he comes out with the tariffs in the same way he's saying he's going to come out with the tariffs, there's only one thing that's going to do, in my opinion, and that's going to spark CPI. And I think that's why the Fed are going, we're not going to do jack until we know what the situation is, because if they come through and reignite inflation, we need to be in a position where we can actually jump on that and not have another 8 months delay.
Which kind of makes sense. It would be the sensible thing to do, right?
That's the safe bet. That's the safe bet.
That is the safe bet. And I know Powell came out with some kind of statement. I actually quoted it before, and I can't remember what the quote was. It was something like, you wouldn't go out in the fog without your headlights on or something ridiculous like that. I can't remember what it was, but he was basically saying that we can't really put ourselves in a position where we don't know what's going on and just act like we do, which was a fair point, I feel. So yeah, that'll be, I think they're just kind of positioning themselves in a way that if they can react, they will react. I'll be interested to see how CPI does play out this year, and how, if we do see this kind of, it might not be this year, right, where we see that kind of big move, but when it comes to 2026, it could be around 2026 where we start to see some big impacts on CPI. And if that is the case, will we see rates higher than where they are now? That would be something that is very interesting. And how will that impact markets?
That's my concern. That's my risk, right? Yeah. When I look at especially long-term stuff, even property investments at the moment, that's one thing that I just cannot ignore. I look at and I go, yeah, sure. And everyone's sitting here going, yeah, they're going to come down. I'm like, historically, rates are still pretty low. We've been way higher than this in the past. Yeah. And it's just one of those things I go, that what if right now is too big for me. That risk of that happening, I don't think it's probable, but the risk is too high.
Yeah. But does that stop you in any way of doing certain things?
At the moment, yes.
Oh, it is? Okay.
At the moment, yes. It is a barrier which I'm debating whether to cross.
Okay, so you're at a crossroads right now. You're at the edge of the road.
I'm at the crossroads.
Do I step out in this or not?
Yeah. So the upside is huge. Mm-hmm. The downside is crippling.
Yeah.
Right. So it's this idea I'm on. Okay, I think we're good. I think rates are stopped. We might see a little bit up, might see a little bit down, but overall, I think we found a median. It doesn't take much for that picture to change very quickly. It takes a little bit of instability and a couple of big political decisions, which 2025, boy, has the political roster to perform. It has the political roster for that to happen. And that's the risk. I don't think it's I think it's sitting at, if I had to put a number on it, I'd say 12%. Okay. I think there's a 12% risk in 2025, which is just a gut feeling percent. There's no maths in that at all, other than what I'm feeling as a gut. There's a 12% risk that we do reignite CPI, and we do need to take those interest rates higher. And that for me is too much risk.
Yeah, I'm going to be interested to see the market's reaction if we do see CPI higher, because will they start to panic? If we do see CPI go above a certain threshold, how are the markets going to react to that? Are we going to see stocks much lower? I mean, we saw towards the end of the year, that actually stocks did start to shape off a little bit. Now, there is a tendency for that to happen. And it could roll through into January, because for a lot of tax reasons in the US, we don't typically see a lot of profit taken until sort of January of the year, because they can roll over the taxes into the next financial year. So, we've got to look at it, and the market has gone an exponential way the past couple of years. Is this a moment where funds and things like that would be like, let's take profits on some of this? We've done really well over the past couple of years. Is this a moment with now Trump coming in, tariffs? We don't know necessarily how they look. What could it impact? Is this a good time for us to roll out of these kind of stock market positions right now and think about, where we could reposition into that? Because they will reposition into it. I mean, NASDAQ was a big story at the end of the year, where we saw quite a significant sell-off in the NASDAQ. That was actually highlighted by the COT reports as well. There was a heavy heavy long position in the Nasdaq, which started to unwind, and that's where I think the play could be. I think the Nasdaq's probably the driver of a lot of the stock markets, because everything's tech now, and tech is getting bigger and bigger, and tech is dominating the markets. And if tech do
you think tech's overvalued?
Yeah. yeah. I mean, come on. I mean, like, when you look at so Tesla, right? They released figures last week of their, I think it was their sort of stock that they released, or whatever, or cars that they produced, or whatever it was, and it was down by like 200,000, I think it was, or something like that, from where their expected sort of release was, and the stock didn't do anything. It didn't go down or anything like that. And the problem with Tesla is it's got like this weird sort of cult following. So like, if you own a Tesla, you're part of the sort of the whole thing, right?
You really don't like your neighbor, do you?
No, I really don't. He's an arsehole. Oh, sorry. He's but no, anyway. Just it's got like this cult following, and I think Tesla hasn't really actually been performing that well yet. It's still rallying up, and that's obviously a tech giant that's doing well. His position now in regards to politics is quite interesting, because I think Trump's going to back him in terms of tariffing the crap out of electric vehicles from abroad, so Tesla can try and take the market essentially in terms of the EVs, which they obviously have a big say in anyway. But I think that's a market that I'd say is overvalued. Tesla is overvalued because they haven't really got the stats to back it up, but they've got this cult sort of, yes, we're going to buy it anyway because we believe
Elon Musk fans.
Yeah, and that's where I'd say that's scary to me. That's a market where I'd be like, oh, I don't like the idea of that. Obviously, another big one that we've got a video coming out shortly, which is MicroStrategy, which is doing, I mean, in my opinion, it's either going to be an absolute gold mine for people, or it's going to be absolutely insane. But MicroStrategy have grown exponentially because of the price of Bitcoin and the way they are basically trying to turn themselves into a Bitcoin reserve. I don't know how sustainable that is, because if Bitcoin just falls off the edge of a cliff, let's say CPI starts to go through the roof, and then Fed have to start hiking interest rates aggressively. Why are they doing that? They're going to try and do that to calm and cool the market.
Yeah,
that's typically negative for stocks. I think if we start to see that happening, then there's going to be an unwind of a lot of things as well. I feel there'll be an unwind of gold. There'll be an unwind of general stocks and in terms of tech stocks and things like that, because people have probably made a lot of profits on it, and then they're thinking, well, I've got to pay for a lot of stuff as well, so I might as well take some profits out of these and use it elsewhere, for whatever reason. So I think there's going to be a big unwind at some point. Do I think they're overvalued? Yes, and there's a couple of tech giants where I think bubble. Yeah, I can't see where and especially when you look at a chart now, you don't go, oh, I'm looking at this chart going, oh, this is a great value area to buy. Nowhere near.
People are buying. But that's one of the beautiful mysteries of 2025, which I'm sure will unravel, because we've chatted about 700 topics and just kind of flow with it. Do you have a take it to go today? Do you have? I
do have a take it to go. I'm going to bring my screen up. There is and it might be a bit of a couple of take it to goes, so I will try and keep them short and sweet. But the first one is going to be this is the Japanese 10-year bond yields and the price of dollar yen over the top. Now, obviously, we've seen some interventions in the past, and the bond yields are now up at sort of 1.14%. Now, the BOJ had this kind of yield curve control, and it used to be at 0.5%. They raised it to 1%, and then towards the end of 2023, start of 2024, they kind of pulled that away and were like, we're not going to do that anymore, but we're going to use 1% as sort of a reference point. So usually anywhere around 1%, they start to get a little bit of a trigger finger of what's going to happen, and they want to try and sort of get into it and intervene, essentially. And we've seen that a couple of times over the sort of last year and in the end of 2023 as well. And we can see the bond yields at the moment climbing higher once again. We're starting to see yen weaken. And we actually had some data out of Awada overnight, and he basically said that they will increase interest rates if we do see a continuation of that. The problem is the market's kind of calling his bluff, because we have seen positive data out of Japan, yet he said, yeah, we'll raise rates, but we're nowhere near doing that right now. There's no chance we're going to do that yet. And it's kind of like, well, when is the yet? When is that thing? What's the thing that's going to start turning that over? So I'm kind of cautious on the yen right now. It's a market that obviously we'd like to talk about, but dollar yen moving higher back in towards intervention zones. I think that's a thing you need to keep an eye on.
Yeah, no,
I agree. I could go on for a few more, but I won't.
No, you got another one. Give us another one.
I got another one. Okay, right. So I'm just going to bring down some COT reports then, because I just want to highlight this. So Kiwi COT reports right now is something that I'm really watching. If we look at the weekly chart here, we're coming into the 2022 lows. This is something that I'm really keeping an eye on right now. If we look at the commercial positions and the non-commercial positions on a net basis, we can see that we're actually at very significant levels. Hedge funds have shorted this at very aggressive points. So we'll just kind of scroll back. We're now sort of at similar levels that we've seen back in 2019. Prices rallied in that kind of point there and moved higher. So I'm looking at sort of the 2022 lows as being a potential area for a reversal for the New Zealand dollar.
Wow. Just very quickly. That's good if you want to get in the commodity trades, right? And
I think so.
Which we already think we like.
That's where I think value is at the moment. If I'm looking across the board and I'm thinking where has moved exponentially that could start to kind of unwind in 2025, then I think it's things like this.
I like it. Last question for you. Do you use aggregated data or disaggregated?
It's disaggregated.
There you go. Guys, thanks for joining us for another week of Market Wake Up. We've got 2 videos coming out this week. As John's already hinted, MicroStrategy is going to be the topic of one of them. And a little bit later on in the week, I'm going to talk to you a little bit about what risk on and risk off assets look like and how to actually judge them before they arrive. I hope you enjoy it. Welcome to Market Wake Up. If you haven't already, hit the like button, subscribe, and we'll see you next week. Cheers, guys.
Peace.